Hey, it's Matt with PriceActionTradingSystem.com, and it is Wednesday. It's February 20th. This will be our chart lesson for the day, and it's going to be a quick again today. This was kind of really this is just a range day. There was an FOMC announcement, and that came out about 1 o'clock, which is somewhere right in here is where it started going. You can see where it kind of got volatile and shot up and then sold off real quick. It was probably down in here before, even now it's still down in here. It's still really volatile, but it's been about 20 minutes. So you might consider this a little failed second entry long right here. And I didn't really see anything else that got us. You see it's still pretty volatile in here back into the 2 o'clock hour. So um, notice that this was the early morning range. And so once we broke higher, you would look for measure that and just go equal distance. And you can see we got close to that right before 1 o'clock, and then the news hit and it went haywire and it overshot that and then sold off. So it won't take long. There's not a whole lot of trades today, so it won't take long. But that would have been my target if you were long in here, trying to get back long. And I would have also measured. I would have measured right there and then come over here, and when it went higher, and you can see that's pretty close to a measured move. So that would have given you a good target. If you, I don't, you might stay in a runner here and keep your stop tight. It's doubtful that you would have been long though. You probably would have been short, so you would have got stopped out real quick. So it's doubtful you would have had a long runner here unless you jumped in down here right around noontime, which I wouldn't recommend that. I think I think you're asking for trouble. You need to be flat going into that hour. It's a nice rally, but notice how volatile it went to the downside, then back to the upside, and you probably would have got whipsawed in that and got mixed up anyway. So um, let's back out a little more. We'll talk about the trades, and I'm a little limited on time, but there's not a lot of trades anyway, so it doesn't really matter. There's a trade right here just after the 7 o'clock hour. And really, if you look at this, the way it did, you go up and you get a first entry, second entry, and then it pushes through and pulls back. But that really is the third touch and confirmation of that trend line. And nice bullish bar. We did push through the EMA there, and we're making higher highs and higher lows again. So I like going long there. And you're just looking for prices to come back up to these highs. And so I would have exited up here close to these highs. And you can see you didn't really get any further before it sold off. And you finally made a lower high here. It's really an equal high, double top. So, and it's a pretty bearish bar. So with this looking like a range and having a break here and a new high, I'm going to try to ride this back down. And that would have been your only opportunity to really get into that trade. So again, you're trying to ride this back down, and your hope is it goes all the way down. It doesn't. You get a correction here, and you continue to kind of work up. But I would have looked for this flatter channel at that point and drawn this line across here. And you might have just looked at it like a little spiking channel. It's still kind of a spiking channel here. But it comes back, it comes back up, and it actually makes another high, and then you get another lower high right here. It's pretty much a repeat pattern of this. It looks a little different, but it's still a repeat pattern. And one thing I will say is this was a second entry short right here. Notice the first entry, second entry, where here it's you're moving up first entry. The second entry was right here, but that's usually better off to wait on the lower high, and that comes right here, and that's just a lower high than that one, and a nice bearish bar. So I like going short there again. Even if the channel is correct, which it hadn't been confirmed yet, you got plenty of room to come back. You've even got a little room back to the EMA there, so I kind of like that one. I wouldn't take this failed second entry long simply because you don't have much room back to this trend line. It looks like it was close to working. I'm not sure if there's enough ticks in there or not. Doesn't really matter. I wouldn't take that trade. And that's not bullish enough to go long. Even though you might look at that as a second entry, this is basically a double top. So first entry, second entry. But that bar is just not bullish enough. You get a higher low right here. But again, your signal bar is not very good. Then you get another bearish bar, and by that time you got 3 bars, and this is really your signal bar, and it's not good enough. So again, there's a failed second entry short way up here, but now you're up at the top of the trend channel, and that's a dangerous place to be going long because it may break higher just enough to stop you in the trade and turn down. But notice what it does. It comes up and makes another double top and lower high. It's that same kind of repeat pattern it keeps making, and you get another chance to go short with a big bearish bar right there. Okay, I had a little interruption. I think we were talking about this trade, a little repeat pattern. It's not a second entry, but it's that double top, lower high, and you're a long way away from the EMA, or considering where we've been, it's a long way. Then we were working down, you get a failed second entry long here, right at, notice we went through the midline, came back, and that's generally what happens. We went through the EMA, came back and tested it. So you would expect prices to come on down on that failed second entry long. I like that, going short right there. And you can see that was a nice little trade back to the trend line. I really thought it would reverse there, but it pushes up for another one. You get a little higher low here. Notice how it pushes through, back through the EMA, pulls back, and it turned right off the previous resistance axis support, and then you get a higher low. So you may go long right there. Everything's back above the EMA, because a lot of times you'll get 2 legs, so you may get a measured leg similar to that one right there. It doesn't turn out that to go that far, but you can see there's a leg after your first break, and then there's your second leg, and you can see we don't quite get that. Plus, they gave you the same measured move from down here as well. So you were looking for that target twice. It might have tipped some people to go long right there on that failed second entry short. And it would have worked, but I'm not going to take that into that trend channel line, especially when it kind of turned down right at it again there, and we've already got a new high in place. But you may go long right there. And you know, you may argue, say, hey, we just it's like a repeat in the second leg, so you may go long there. It would have worked. I'm not crazy about it, but then it sells off. First entry long, you pull back, and you get a second entry long, and it breaks and fails instantly and turns back down. When it went below that, I'd have my sell stop right there, and that's a nice little quick trade. You get a little bit of what looks like an overshoot here, and then a first entry, second entry. That's your signal bar. It's not a great signal bar, so what you might do is when it breaks lower below this one, since this has an equal high, you might say, hey, I'll drop a limit order back here, or maybe even another tick back, just see if you can get a little better entry. And you might take it like that. You could just put a sell stop right there. It's not a perfect setup, though. It is a second entry, and you are looking for prices to test these, possibly test these lows, and that's the first break of that little channel. So you're looking for prices to try to make a new low. So you would expect prices to try to go lower here. So that would be if you're going to enter, you want to go short. And I'm not crazy about it, but I did mark it green because it is a second entry short, and you're looking for prices to come down. And then it bounces. This was a possibility. We weren't down to the lows yet, so I think you want to wait on a higher low, and that gets you into the 12 o'clock hour. But you want to be flat because there was an FOMC announcement. So that's what this big blue, don't take any trades in there. First trade I saw maybe was when we're working on this second leg down, and that is a failed second entry long right there. Notice you're working down all the way. First entry, and you're working down again, and there's a second entry right there. And you would expect that we were at least going to test these lows, and you probably might get a measured leg. So measure that first leg, and we didn't really quite get a measured leg, but we bounced right at the previous lows, as you can see right there. So that would have been, so that gives you some incentive to say, hey, we're probably going to at least test this low, and we may make a measured move. And it bounces. I would wait on a higher low here, as I discussed earlier, which just doesn't come to way up here. And you just move too far, and it's after 2 o'clock, and I don't think I would enter there. So that did it for today. And I hate to kind of rush through those, but it's late, and I've got another obligation today, and it's been one of those crazy days. But there's a few trades in here. And just remember on range days that generally you want to look for shorts, come back. Let me come back across here. You can see at this point, this is a range. So you're looking for shorts across these highs and longs across these lows. In the middle is where you kind of got to be careful. And then we just kind of shot up. And so these are still considered failed breaks if they're trying to come back and they're a little bit away from the EMA and all your other reasons for entering the trade. And then of course you got this little spike and two-tiered channel working up. So you may be interested in these longs that continue up that I marked green. And then of course now you had your break, 2 legs up, and then you get a couple of legs down. And so pretty straightforward day. Not a lot of trades, not a lot of, it didn't get real volatile until, I mean, this is kind of what you expect sometimes on FOMC days. The market's kind of waiting for the news to see what it's going to do. And then it still stayed in the range the rest of the day. And that just shows you the price action generally still works. We had a little overshoot, it sold off, we came back down, tested the low, and then we came back up and tested the high. So the price action was still rolling along, even right through it gets volatile, but it's still rolling along following the price action. So it works even during the news items. So keep that in mind. But I'm going to wrap it up. We'll be back again to do it tomorrow and wrap up our week. But I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.